Hi, this is Matt, and today we're going to look at earnings in the Excel-based API sheet. Again, you can contact me to get a download link and key in order to get your sheet trial going. There are 12 tabs. Today we're going to be looking at the core data and the value vol in order to look at earnings opportunities, and then I'll just show you briefly the earnings date, but that requires a premium subscription. So we'll be looking at the earnings core report, and then we'll be filtering by weeks to next earnings and some volume. We'll want the stocks to have some volume so we can put a trade potentially. And we'll then look at the value vol and try the list feature. So let's go to the sheet, and we'll go to the core data sheet in the drop down earnings core. Getting all data, I've already done this. It takes a minute or two, so I've done this just now. And then we'll use the filter in Excel. So you highlight the headers and click filter, and what we'll want to do is we'll want to find all the earnings to weeks to next earnings is less than 3 weeks, let's say. So that gives us a number that gives us 3,000. So let's do less than that. Let's do 0 weeks, or let's do 1 week. Weeks to next earnings, 1 week. There we go. So now there's 1,000, and let's narrow those down by volume numbers. So yeah, everything looks good here. So let's look at some average 20-day option volume. Let's make it need to be greater than, I don't know, 300. So now we're down to 370 names. Let's make sure the stock price is between let's say it needs to be 25 to 75. Now we have 134 names, so that seems like a reasonable number. Let's now copy these names, and we'll copy these to the value vol list feature here. And what this will do is it will go value the short-term implied volatility versus some historical numbers. It will value the long-term volatility, and that's what it's doing. You may have seen it go by. The put call slope, is that cheap or expensive, and are the months with earnings overvalued or undervalued? So we can then sort these and find the stocks that are undervalued from a earnings perspective, and then we could also sort it by clicking in that column and saying sort. Now we find some stocks that are overvalued. So do we want to sell or buy the earnings months? Well, let's try a name that is somewhat recognizable, at least to me. Here's First Solar. So you click on that name, and then it populates the value vol. Now we're not going to get into all the intricacies of the value vol. That's going to be in a different one. But what we want to concentrate on is this final table that talks about the earnings month. So as we could see, First Solar's earnings month, and these are just regular expirations, is the first earnings month. And so we'll want to see, is this an under or overvalued situation? Now, the earnings that we saw that were undervalued in the table below offset by what we're seeing as an overvalued situation in terms of historical and implied volatility. So when we look at the earnings month up here, there's no green for a buy. We were looking for a green buy here, so for First Solar. So it's not really showing up because it's being contradicted by the short-term implied volatility. So let's go down and look for a name that has green in the earnings and maybe green or not red in the short-term volatility. Like First Solar had red here and green here, so they kind of offset each other. So we could do this first one, DEPO. I'm not familiar with DEPO, but let's see what's coming up with it. Okay, so DEPO has somewhat kind of contradictory signals in the short-term implied volatility, but it's undervalued in the earnings month. So let's see what that earnings month valuation is. So the way that we look at earnings is we'll see that the at the money in the front month is quite a bit higher than the second month, and what that says is that there's some implied earnings effect in there, and we have ways to measure that. And we'll say that that earnings effect is either more or less than a usual for this particular name. And this is saying that the forecasted earnings effect is 275, but the market is only 103%. And then I'll want to see that corroborated with the earnings move implied in the second month, which we actually don't see. That second month isn't much higher than the third month. So again, I might look elsewhere for another stock that might look a little bit better. So let's go to GPOR. GPOR, so now I'm noticing a couple things. One is, nope, that doesn't look that good either, because these are a little bit contradictory. Let's see if we could find one that has both. And you could almost look over here at the second month implied move is here and the first month implied move is there. So it's a bit of a shortcut to find. So I'm looking for one that has, and I could sort that. So why don't I do that? So I sorted this, and then now we'll want to find implied moves, large and large here. So here's one right here. So this is INSM. So let's go take a look at INSM. Oh, I should have sorted it by negative number. So let's do that again. That INSM is overvalued. Positive is over, negative is under. So now let's find two negatives. Here's one that has two negatives that are pretty good. AIRM. So AIRM, we have a earnings in the front month, and we have a forecasted earnings effect of 207, but the market's only implying 169, so that's slightly undervalued. The implied earnings move in the second month is 6.7, but the average actual move is 8%. So this might be one that we'd take a closer look at based on from an earnings standpoint. So that type of information, by the way, the implied earnings effect is also available in the core earnings. Let's go over to the implied earnings effects, and I'll take out the filter so we could read these column headers a little bit better. And then I'll also show you where, so near the end of the columns, the implied earnings move, implied earnings effects are in DV and DW. The definitions for the earnings are in the earnings in general tab, where you could go and read what those mean. So down here at the bottom here is the absolute earnings move that we saw was 8%, and the implied earnings move is here as well. So that's what I wanted to show today. All this information again is available in the API sheet that you could download, and you could contact me at orats.com with any questions. Thanks.